A mere 6 months ago, Bitcoin was riding high, hitting its peak price of $67,802. In the last 2 weeks, leading 401k provider Fidelity Investments said it would offer Bitcoin investment opportunities, bringing the cryptocurrency further into the mainstream. But despite all this buzz, you may want to pump the brakes on your own Bitcoin plans. This morning, Bitcoin is down more than 50% from that November high, selling for just under $34,600. This weekend alone, it dropped more than 3%. For a look at what's behind the Bitcoin slide, we're joined by Exiger executive Patrick Fallon, a former chief of the FBI's financial crimes section. Patrick, thank you so much for your time. What is behind this Bitcoin collapse?
I think a lot of it has to do with market volatility in general. Bitcoin itself is relatively new, but people are looking for safer havens for their dollars, right? Their retirement funds and other ways they invest. And because Bitcoin is relatively new, there's some risk there. People are pulling back, but people are also pulling back from their traditional investments as well. The stock market is down pretty significantly over this year. So I think a lot of it just has to do with general volatility of the markets, but then there's the added aspect of Bitcoin being a relatively new investment vehicle.
Yeah, and cryptocurrency companies have been working to become household names. They've succeeded in some respects, Bitcoin obviously being the most popular of the bunch. What should the average consumer know about Bitcoin and cryptocurrency in general?
I think the average investor needs to understand risk in general. What is your risk appetite? If you have a long-term horizon, you should have a greater risk appetite. If you're trying to use the money that you're investing now for a short-term purchase, perhaps a house, perhaps your children's college education, you might want to steer clear of riskier investments, including investing in cryptocurrency.
When it comes to, we've heard a lot of these cybersecurity threats with the ransomware attacks. They often use cryptocurrency as the ransom payment. So when you were at the FBI, how rampant were Bitcoin scams of this nature and others?
So there's two things to be thinking about. One is the utility of the cryptocurrency in the facilitation of a crime. And then there's the others where there's fraudster trying to present themselves as the producer of a cryptocurrency and getting money that way. But obviously the anonymity of cryptocurrency allows for actors to think that they're going to get away with something. So they use, in the ransomware attacks, they'll use cryptocurrency as a means of payment. However, law enforcement is very much ahead of this, and using the blockchain technology that's out there, you've seen cases where the FBI and the Department of Justice have seized stolen Bitcoin and cryptocurrency, and they're going to continue to do that. And so this will help deter folks from trying to go to the cryptocurrency as a means of payment for criminal acts.
Why are these cyber criminals leaning on cryptocurrency? What is it about it?
It's the anonymity, or perceived anonymity. So you don't have your name out there. There's not a bank account necessarily tied to you. If I said, if I hacked into your account and said you need to wire the money to my account at Bank of America, there's a pretty easy trail there to follow. If, on the other hand, I say, here, you need to pay me in Bitcoin, there is a layer of anonymity there. However, like I said, law enforcement using blockchain technology is able to track that down. It just takes a little bit longer. It takes a lot more sleuthing and a lot more diligence on the part of law enforcement. And they're very capable of doing that.
And just briefly, if you had to sum up consumers' approach to Bitcoin and other cryptocurrencies, what in one word would you offer?
Caution. Just like anything with your retirement funds, I would be very cautious, right? Look hard, do your research, but it should be available to us to invest in. There shouldn't be any kind of draconian measures that are put in place that prevent people from putting their money, whether you're going to a casino or whether you're going to invest in Bitcoin. You should have that capability to do that as long as you are an educated consumer.
Caution, perfect word there, given its volatility. Patrick Fallon, Global Head of Anti-Bribery and Corruption at Exiger, as well as a former chief of the FBI Financial Crimes Section. Thank you so much for your time, sir.
Thank you.